less than 15 wide inside, because that's the entire lot, for 810,000. So altogether, if you buy, I can't even call it a lot. It's not even a lot. Like if you were to see the photos of this thing, it's ridiculous. Uh, but if you were to buy it, you're in for about 1.6 and change, which is in and around what a brand new home, 1,800 square feet would kind of cost in that area. So I don't know. In the beginning, when you think, oh, 829,000 for a little piece of something, we're not even going to call it a lot because it's not really a lot. You think that's ridiculous, but then the end result might be worth it for some people. I just be careful of all those stairs. That's it. Reach out to me if you're interested in this little piece of parking space, grass / sidewalk.
So you can build your 15-foot wide house.
I don't know.
Yeah, so like, what does that give you inside? By the time you take into account, like, what do you actually have left for space inside to width?
Stacked bedrooms.
Stacked everything.
You have to go through your sister bedroom to get to yours.
Hey,
I think that's why it's 5 stories, because
Right?
you get 3 bedrooms. There's one on each level, so privacy galore.
5 months ago, that thing would have been underpriced right now. Might have got $2 million for that lot.
I know, hey?
Well,
Especially in Leslieville.
if you think about it, that's just the direction things are moving in, right? All the stacked townhouses, condos. What happens is you got a house that actually has a penthouse in it. You know?
That's like I said, each bedroom has its own private floor.
And nowadays they have these the new like retrofit elevator. Oh, we don't have to retrofit it because you're building it from scratch, but 5 stories, put a little elevator in there, and you're
Yeah, where are you going to put an elevator? It's only 15 feet wide. Elevators.
put it right at the back, and
So one person,
outside?
one person at a time. I'm going up to bed, huh?
Right. Send the elevator back down.
Send it back down.
Okay, I'll be up, send the elevator back down.
You know, it's all fun and games because it's not our listing, right? If it was our listing, it would be a
If
whole
it was our
different world.
listing, I'd be introducing it a totally different way.
Yeah. We would have had time to really, zhuzh it up.
Zhuzh.
Yeah.
Okay, you know what? I'll hit the second one for a quickie here. So basically, as the show is called, 41%. The market has dropped 41% compared to last year. And so what does that really mean to homeowners? And the thing means is that you're going to get less money than you did in January or February or March. And really that's what you're looking at. However, if you are a short-term sort of, thinker and you're trying to pace the peak of the market, we got some more stuff coming during this show to show you that that's not really possible. You may have missed that mark, but also the real estate market constantly goes up and down and up and down. And we're going to work really hard for next week to put together a bunch of charts and things to help you to really understand what's actually happening in the market. Is it down 41%? Has it crashed to half price almost? No, that's not what's happening. Transactions are at an all-time low, and that's not surprising. The last sort of part of this for me is just that right now the average price is what, $1.254, so $1.25 million basically, which that's where it was in January. So it looks like we're kind of rolled back to the January prices, which was an incredible increase over December and November, and it's basically, the highest price ever in the history of the Toronto Real Estate Board. And February just got stronger, and March started to dip, and this month again has dipped a bit again. And so you're going to see a lot of stuff on the news, especially like Durham, Brampton, all the 905s have really taken a huge hit. And when I get to round 2 here, I'll explain to you what's going on there.
All right, so I'm gonna talk a little bit about this. Everyone's has this craze about the bubble, and are we in a bubble? Are we gonna pop? And a lot of people think because in Canada, and Randy talks about it a lot with immigration. How we have a lot of people coming into Canada every year. So pretty much, if there's, some people think that even if there's a bubble, because of the amount of people coming in, that will kind of give us like at least a bit of a floor. So maybe we'll come down a bit, but because of the amount of people coming in, it should stop the pain. Right? But as many of you who are in the market or who are looking to get in the market probably know, the market is changing. We're not getting the crazy 3-day listings, 25 offers with buyers literally clawing over people to try to get a bid in and not get overbid for the 10th, 20th time. Right? So things are slowing down. Things are changing. They're coming more like a usual real estate market, right? You're not just putting a house on the market and within the weekend you're gone, you're sold. So while some think of a bubble as something that's going to be popped and it's going to come down, others argue again that because of the population, because of all the people coming into Canada, like again, Canada's a great place to live, people want to be here, so we should have a bit of a base. But if you kind of look into the numbers and if you kind of dig a bit deeper, you'll see some trends, right? So for one, actually one thing with immigrants is actually they're actually considering leaving because of the increase in cost of living. Like a survey was done, and 1 in 5 surveyed said they are planning on leaving within 2 years. That's the first thing. Secondly, demand has plummeted the demand for homes has plummeted in the recent times, especially with all these increases in interest rates and so forth. It's becoming much harder to qualify for the same mortgage you could have qualified for just a few months ago, right? So, and also when you chart Canada's population to the price of new home prices, there actually is no relation there. So even though you might think because we have people coming into Canada, that should increase the demand, but when you chart those two things together, and it might be up on the screen for you to see now, there's no correlation. So if you go back to 1988-90, at that time, the population was outpacing what it is now, and still the market crashed at that point. So again, while some of you might think that because of the immigration, because of all the people, there's not necessarily that same demand. And finally, with mortgage prices, right? It's really the price of actually owning a home is what's more, what kind of drives the pricing. Like it's even for right now. Right now, the person who could have afforded $1 million for a home, that person's not there anymore. They can now maybe afford 800,000, 900,000, depending on how they qualify. So it's not necessarily, even though the house may have sold for $1 million last month, if the next buyer only has 800,000, well then either you take 800,000 or you don't sell the house, right? So that's kind of what's going on with the market. So, so for those of you listening or watching, what do you believe? Are prices doomed to fall, or will this just be a little blip in the road and things are going to continue as they've been going?
Interesting question.
Yeah, I definitely believe that we are at a blip in the road. Will prices, but my version of blip in the road versus someone else's version of blip in the road may be different. I'm not saying that prices won't adjust and adjust hard. That part I don't know. What I can tell you is that throughout history, even the worst time, even if you go to Great Depression, you go to any time, it climbs out of it, and prices begin to go up again. So when you're looking long term, then all these issues mean nothing. It's like watching a show, and at the end of the show, you know they're happily married and everything goes off all great. In many shows anyways, and so that's basically how it's going to end up. I went back, I looked at some really old charts and created some new charts, and basically seeing the ups and downs and ups and downs and ups and downs and ups and downs, throughout history, throughout every single year that the real estate stats have been out, we've had ups and downs, some years more drastic than other. Every real estate cycle is an up and a down. It's usually up in the spring and down in the summer, and that's just normal, and we don't kick up a big fuss for it. But in this case, because the market was up in the winter and down in the spring, which is our hottest market, and usually the summer is the slow market, this is where we're really concerned because during our hot market, it slowed. And then we're coming into summer. But that on its own, if it was left to its own to do what it's going to do, to allow consumers to say, I don't like this price growth, I don't like bidding on 12 homes and all this stuff, to allow consumers to take that on themselves, we would see the market slowing down. And that's what we saw in February. In February, we saw the end of the 12 offer situation, and everybody said, you know what, I don't care if the market's supposed to get better in March, I'm not buying. And we saw a huge amount of buyers drop out of the market. And then Johnny Late to come, which is our government, comes in and says, oh, we got to cool down the real estate market. But the real estate market's already cooled down. It's already on that trajectory. And it wasn't a small, minor decline. It was a very, very sharp decline. And so all the realtors, all the brokerages, all the mortgage agents, all saw a drastic decline in the market. And our government's still out there pushing negative propaganda, policies, more taxes, more spending also, and they're asking for the Bank of Canada, Bank of Canada needs to raise the rates to get inflation in line. So we got that big problem coming down the horizon. We got inflation at an all-time high, 3 to 4 decades. For the last 3 to 4 decades, we're pushing on to 4 decades now. We're over 3 decades inflation high. We got talks of stagflation, which is where inflation is high. We have slow economic growth, which is not really where we're at right now, but we got high unemployment. And everyone knows our unemployment numbers are about as reliable as our inflation numbers, but our inflation numbers are through the roof. And why I say that is because our unemployment numbers, if you're unemployed, I think it's for 6 months or that, which we're looking at 2 years where the government's basically made almost everyone unemployed, you drop off. Your numbers don't count anymore. And so there's a whole slew of people that are sitting in the background that actually may not even really want to go back to work. And then we got fast rising interest rates. We got global pandemic, which isn't yet over. We got the largest war in Europe since World War II. We got record higher consumer debt, surging energy prices. You name it. And then everybody's talking about this bubble, which is really the real estate bubble was caused by, free money, low interest rates, heavy spending, and Bank of Canada policies where they're supporting the government by buying up all of their debt. So the combination of these things has really made our economy extremely unpredictable. And so, and it's unpredictable because our government has entered into creating policies and restrictions and economic decisions which are really unusual. Shutting down your economy is really, really unusual activity that we've never really seen before. And when that happens, there's going to be side effects. So that's just where we are. That's why it's almost impossible to know what the market will do. Because the government, the Bank of Canada, has been very clear that they don't care about real estate pricing. They put the stress test in, made you qualify for 2% higher, and that's that. And so they don't care about that. What they do care about is inflation. The inflation that they've caused, they need to bring in line. And that's what they're concentrating on. And how they bring that in line is that the inflation, whatever the inflation number is, they need the interest rate to be above that to put a downward pressure on spending. That's going to cause a lot of problems because once you put a downward pressure on spending, you are moving closer to that recessionary sort of environment. And with all the things that are going on, it could be catastrophic. It could be. However, In 1990, when it was catastrophic and we started having, it was like a 6+% decline in the market, then it 8, and those are rough numbers. It was 8+, and then it started to drop off to like 3, 2, 1% decline in the market until 1996, where it started to go back up. And so, that was like the worst time in history. If we have that happen again, then look at the fact that the numbers then crawled up, and we were looking at $200,000 and $300,000 average price, and here we are at 1.3. So should we really be looking at what the negative numbers are, or should we be looking forward and starting to position ourselves to be able to get through this really unpredictable economic environment that we're in? And that was only a minute long. So
That was less than a minute.
it was a little under a minute there.
On to a new topic. Do you want to make money in real estate other than buying a house? If you're in the stock market right now, you've seen the value of your portfolio dip depending on what sectors you're in. But really, real estate is really holding steady, and there are different ways that you can invest in real estate other, again, than buying a house. You can do it actively, which is where you own your own residence, own a rental property, flipping a house. Or you can do it passively by investing in mutual funds that hold real estate, or a REIT, a real estate investment trust. But I'm going to, over the next few weeks, tell you different methods of how you can invest in real estate. We'll start with the classic approach, owning your own house, purchasing your primary residence. Not only do you have a place to live, but you're buying a long-term investment. You're living basically in your investment, and you let the market, take its value up, which is the usual trend, upward. Even though we're seeing dips here and there, as Randy mentioned, we go in a 7-year cycle. So the general trend is upward. Your value will increase, and instead of paying a landlord's rent or landlord's mortgage, you're paying your mortgage. You're paying yourself. And that helps to grow your net worth. But what you should really concentrate on when you're buying your principal residence are a couple of things. You want a home in a good neighborhood. You want to look for a place with low crime rates, even though you tend to, neighborhoods always change. I know when I moved into my neighborhood, the crime rates were low, and all of a sudden they took off. I don't know, you're in Ajax, right, as well?
Yeah, even Ajax is kind of
right?
not the same as when I first moved there.
Exactly. So, that could be hit and miss. But you want easy access to public transit, highways, a good school district with good reputation and rating, and you can find school ratings online. You want close proximity to amenities like restaurants, shopping, things that you'd use. You'll probably need to save up for a down payment, and then use that down payment, take out a mortgage. First-time buyers can use they can put money into RSP and take out $35,000, I believe it is, $35,000, up to $35,000 each, and use that towards your down payment. The next best bet is to put the money into a TFSA, and shop around for your TFSA. For different institutions offer different rates. Digital banks like Equity Bank, what's the orange one?
Oh, Tangerine.
Tangerine. They offer pretty good rates, better than your big five. So shop around. So as we go around, I'm going to tell you some different ones, but think about that.
Yeah, you were talking about the renters
Paying the landlord's mortgage?
Yeah. Right now, I believe outside of the 1990s, so the early 1990s, the late 1980s, the rent versus own has never been a wider gap. It's much more economic to rent now than it is to own. And so we can see, a big rush to the sidelines of people going to rent, because you can get, let's say, $1.25 million house for around $3,500 a month to rent. But to own, you got to pay around $5,500. A little under that, but we'll include taxes and stuff like that. So you got to pay about $5,500, which is about a $2,000 difference. And so people are saying, well, $2,000 is $24,000 a year I could save. So I really would rather save the money.
But are you really saving
Yeah, I
it?
was gonna say that most. It's, whenever we have these like discussions, yeah, you can save the money, but if the money's gonna be going to whether it's if you're a smoker or smoking,
Right.
vacations, which is again you should all have your vacations, but it's people say they're gonna save money, the difference, but generally they don't.
Yeah.
And
But
so-
isn't it
And that's why they
buying a
call-
house?
What's that,
To buy
Jackie?
the house, isn't that kind of saving?
Forced
because
saving. It's
going
forced
into equity?
saving. Forced
Yeah.
saving / investing.
Exactly.
Can I ask that we assume that every Canadian, if they save that $2,000 in renting versus owning, if they're responsible with that money and don't go out and buy bubble gum, but they're actually responsible with it and they save it. So they actually will save $24,000 a year for the next 5 years. 24,000 times 5 is what, Anthony?
120.
$120,000 they would save over 5 years.
What kind of returns are they getting on that?
So, what I would like to do, Anthony, if you had $1 million mortgage today and in 5 years, you owe $873,000, that's $125,000 roughly speaking. So you would actually pay your mortgage down.
But does it actually go down that much though?
I'm looking at the amortization
Okay.
schedule here. It would go down to from 976 to 873. So call it 100,000. So
140.
So
The difference would be 140. So the saver would have 140,000 difference.
the saver would save 200.
Well, if he saved 240,000, but the owner would have saved 100,000.
100,000. The owner saves 100,000. Now that's 5 years of owning your house, and you've saved $100,000 inside your mortgage. The tenant has 240,000. Is that what we worked
Yeah.
out? 240,000. Is that right? Yeah. Are you sure?
I'm a genius.
You're a genius. So 240,000 because we worked it out 24,000 a year.
24,000 times 10 divided by 2.
Okay, so it's 100 and
24,000 times 10 is
240
240,000.
divided by 2
is 120.
is 120. So it's only 20,000 difference.
Okay, the difference.
Okay,
20,000,
Mr. Genius. I'm just teasing. I'm just teasing here. But so there's only a $20,000 difference between owning the home and renting the home, even though there's a $2,000 difference per month. So keep that in mind, because a lot of people don't really look at it like this.
But just in the jet, what rates did you use? Are you using the today's rates?
4.19.
Okay.
I'm using. Okay. Remember, I'm fairly conservative. I don't like long hair, like some people I know.
Easy.
Easy. So the next thing that to bring up with that stat is that over the 5 years, what happens to home values? Possibly, if home values only increased 5%, which is in the GTA, that would be a record low.
Yep.
In the GTA, you're looking at 7% plus. Okay, for home growth. If you're looking throughout the rest of the country, it's very, very different, and we can see 3% in areas, and overall, we can see much lower pressure. But in the GTA, which is where we roll, is we're looking at like 7 plus. And so if we were to have a 5% increase on $1 million, it's $50,000 a year. 5 years, $250,000. Your home has increased possibly $250,000. The tenant won over $20,000 in savings, but your property value has totally destroyed that in the first 5 years. So, even though this is one of the worst times in history to be to compare rental versus ownership, it is still clearly much better to be in ownership. Now, if the tenant were to take that money now and invest it, that extra $2,000 a month and invest it and then make a return, I can see it starting to balance out. I can see, but I don't know how close it'll balance out. But I will tell you this, that irregardless of how that works, the fact that you can sit inside your home, you can make it better quality of life for your family, even if you were able to do investments in stocks and bonds and all that stuff and somehow level the playing field or even make it a little bit better, your standard of living is way lower than that of the person who owns the house and can do whatever they want to the house to have their family enjoy it. And so make their backyard oasis, do whatever it is, their basement, whatever it takes for them to have an amazing quality of life.
To play devil's advocate here, though, so traditionally, yes, 5-7% your houses have gone up each and every year since, again, as far back as you want to go. But back then, when prices were, again, if you go way back,
Right.
50,000, now 60,000, 100,000, 200,000.
Right.
Do you think that trend of 7%, because like we're at let's say $1 million right now, so that's 50,000 a year. When we get to 2 million, it's 100,000 a year. Is it going to still continue, or will that kind of shrink a bit because?
Awesome question. And I don't know if viewers really followed you on that, but they may have. The question is really, can prices continue to climb at traditional rates? Because the prices are so high that those little climbs of 5 or 7% turn out to be $50,000-$70,000. Is that realistic?
Yes, to put in perspective, at $1 million, 5% is 50 grand, right, per year. At 100,000, it's 5,000. So a $5,000 increase, yes, it's still a lot. Again, it's still 5%, but it's 5,000 versus 50,000, right?
Yeah.
Or if we get to $2 million one day, that 5% is now 100,000, right? So yes, we've been getting that 5%, but our jobs aren't paying us 5% more each year, and it's a bit easier to, okay, I can take that 5,000, 7,000, I'll make it work, but can we make $50,000 work? Can we make $100,000 work as the prices continue to get bigger and
I
bigger?
think we should get some charts together for the next show showing, like, if we go back, even from now, go back 5 years, because we've had something drastic happen in the last few months, and look at those, superimpose them, and look at them, and then you can probably
I
extrapolate
have them
from
right
there.
here,
Ooh.
as a matter of fact.
But even before we get to that,
Yeah, I won't get to it. But we have them.
yeah. Oh, okay. Even like last week when I was talking about how in Canada we've kind of outpaced everyone else in terms of the G7. Like again, I wish I had the chart. Maybe we'll get it for next week. But the chart it's ridiculous. Like we have the other G7. They're all fairly close to each other in terms. They're all growing.
Yeah.
But when you have Canada on that map, it's like a chasm between us and everyone else. So it's, I don't know. Can we sustain that long term?
So the answer is to that, we don't know. We're going to see what's going to happen in the future. But if we look to the past as an indication of what's going to happen in the future, put that on. Then what we will see, what we're going to see clearly, is that our economy cares nothing about how big that number is. What it cares about is that each year that the country spends more money, turns more money than it did the year before, and that's how it stays alive. And if it doesn't do that, then it does not stay alive. Then we got big problems. So because we live in a debt society, because our money is actually a debt instrument, which it's created through debt. Really, all of the increases that we have in that of money flowing within our system is all created through debt. And so because that's the case, we have to be increasing each and every year. Do not think for 1 second that Justin Trudeau decided to double immigration was an accident. It's a policy that he put in place so that he would have more people here churning the economy. That's why he's done it, right? And he knows that he has big spending policies, so he needs to somehow pay for them. And that's why you're going to see our taxes go up. That's why, and I hate to do this because, we got, again, it all falls under that whole bugs and lizards thing. But the people who are like all about the economy, that we're all going to die we were supposed to be dead already according to their stats, that, we're killing our world and we're dying. I believe, yeah, you know what, don't throw garbage on the ground. Yes, try to get cleaner emissions and all that stuff. But they're using it with all this fear mongering to actually tax us to death. Because that's just another thing that they can slap taxes all across us, all on the gas prices, on our heating, everything, on our property. They can just add a whole bunch of new taxes in the name of saving the planet, which they know they're not saving the planet because they're hopping in their jet planes every single day to go somewhere. So they're the ones that are more destroying the planet than anybody, but that doesn't matter, right? So obviously it's just a game, and the game is to have a way in order to collect more money from the public, and that's the game. And I know that won't be popular out there, but it's the truth. It's my truth anyways. Because and the reason why I say that is if they really were sincere about saving the planet because of emissions and stuff, they wouldn't be taking a plane ride to bring 7 people together in the G7. Okay? So not only are they taking a plane there, why wouldn't they have a Zoom meeting? Huh? Like, I don't get it. Like, then you're into saving the planet. But instead, you have a convoy of 12 of gas-guzzling SUVs or more, drive you all to the airport, hop on a private plane, get to the next destination, and then you got 20 SUVs because, 12 is not enough when you're in a foreign country, right? So now you got 20 SUVs taking you to your spot, so you can have a meeting with 6 other guys in the G7. Like, I mean, honestly, and then you come out and tell us that we need to be more conservative with our travels, and we got to pay more in our heating costs and more in our gas prices and everything to curb this and save the world. It's just bogus.
Randy, come on, it's do as I say, not as I do.
I apologize for that. Cut that part out.
You're going to edit that before it goes to air.
Edit that out. I don't want to see those guys with the glasses and the ear thing come in. We need to talk to you.
You might get men in blacked. All right, so I got my next little thing is more for our people down south in the States. So I think down in the States, their restrictions were a bit more loose, depending on which state you are, than we were here in Canada, where we took a bit longer to kind of, I guess, unmask and join society normally. You guys were kind of a lot faster to get back into being together, right? So that's all good and well, but are the ramifications of COVID over in terms of real estate? Are there still, I guess, people who are being affected? And unfortunately, especially for down in the States, in terms of foreclosures, there are some issues. So basically, foreclosure activity is rising, and they're basically because now that a lot of the moratoriums in terms of COVID have been lifted, and I guess before you could have kind of gotten away with, if you didn't have a job before making payments, you were still able to live in your home and kind of make do. But again, a lot of the moratoriums have been lifted, and there's actually been a 39% increase in foreclosures during the first quarter of this year. And the states with the highest are California, Florida, Texas, and Illinois. So those, I guess, left and right, really. Florida's, I think, more right. California's obviously left. So it's, I guess, a bit of both. It didn't really matter which state you were in. So to combat this, what the Federal Housing Administration is doing is they're introducing 40-year loan mortgages. So I guess giving you the option of kind of lowering your amount you're paying for your mortgage, right? So you can hopefully stay in your home. And again, if you're having an issue with foreclosure on the states, you should kind of try to look into this. So loan services can offer this option immediately, and it'll be a requirement to actually offer it in the near future. So again, we're here in Canada. I know we used to have the 40-year mortgage, but they took that away.
30 they took.
Oh, it was 30?
Yeah, 30, and they took that away for most people. If you have 20% equity, you can do it, but outside of that, they won't allow it. Which I find very strange, because
trying to
Who
solve
the
a
hell
problem
are they
with.
to tell you how you can pay your house? But they do. They have that power to come up with that. They want to make housing more affordable. But I guess the problem is it really doesn't matter what they do. If they came up with a 30-year or 40-year or any of that stuff, really all that's going to do is fuel the home buying more.
For
Because
sure.
it makes it more affordable. So, is affordability really what they want, or is that their talking points? And I really believe it's just talking points.
And I think the issue too is also the constant changing, right? I think if you whatever the rules are, make those the rules, and then people will figure it out. But when you keep on changing them year after year, again, you're kind of implementing your own supply and demand, which I get you kind of have to control it a little bit. But if people know what's necessary, I think, and you let the markets take care of themselves, you'll have some downs, but it'll overall balance itself out in the long run.
But our friends to the south, what caused them to turn in their keys? What was the main thing, other than is it jobs gone down and?
The article didn't really speak about it, but I don't think unemployment in the States, from what I've seen, is actually pretty low right now. So
well, everywhere it's recorded low. I think one of the biggest problems the States is facing is their inflation. Our inflation numbers, as fake as I believe they are, because 6.7, I don't know, listeners out
Way
there,
too low.
if you are experiencing a 6.7% inflation numbers, please let us know. But I know for the rest of us, we're feeling 20 and 30% inflation numbers. But in the States, they record their inflation numbers just as crookedly as we do, and they're at 8%. We're at 6.7. They're at 8. So it's crazy. So it is getting very difficult to be able to balance that with real estate markets are out of control. Let's get real. Nobody wants. Even right now, for April, we were seeing, what is it, something, I think it's like 17%. We'll double check on it shortly. But even though we're experiencing, let me see, what's the price? 12.3%, 15%, sorry, price increase. 15% price increase. That's still out of whack. It really should be cut in half from there. And remember, this is a lot of people right now, and this is the part that sort of irks me a little bit, because they're creating a hysteria that is not real. They're saying that the market has totally dropped and prices have dropped 250,000, but they're comparing them to times to the highest peaks in our this year marketplace. So you're looking at like a peak in late February, early March, a peak in numbers, and then now we have lower numbers. And then when we look at our lower numbers and we start to examine them, you start to see some really weird things. Like, for example, the higher end market, the 2 million plus market, was much more active in January and February than it is now. And so, when that higher end market is more active, the way we measure the average price, that skews it up. It makes it higher. And then you got a period when the average price is dropping, but so was the luxury market price. Sales dropping, so there's less of that big dollar items pulling up the average price. It's actually now pushing it down because there's less sales. So you can't really truly understand our numbers that easily by just looking at the average price. You have to do a lot more investigation, and I've done some of it and not all of it. It's a rabbit hole that will take months and months to go down to really grab things. But in general, we are definitely in a slowdown. The slowdown means that you're not in a multiple offer situation where you have 12 people, which is bidding up prices way more than they deserve to be because people are hysterical. And then our government's putting in things in place that's going to make that a live auction, which is going to make things worse. I promise you, live auctions will make it worse, because when it's a silent auction, you bid what you, in your own spirit and everything, you're a little hyped because other people have bids in there, but you don't know what they are. So you're not bidding at the extreme end. You're bidding at what's comfortable for you, or even a little bit uncomfortable. But once you get to live bidding, you are in an uncomfortable situation throughout the whole damn thing.
And is a live auction even necessary? Like, it was necessary maybe
Yeah.
4 months ago, but
Yeah.
now if you're only getting 1 or 2 offers, is that like
Is
is that helping, or is it?
Yeah. So and this is
They
it.
just want to be seen to be doing something.
Yes, and that's what it is.
Yeah.
Because Justin Trudeau, came out, and maybe I should show that video next time. But he came out and he did his whole "I'm the best," and he said, it is not right to have people doing your having corporations and other investors investing in your residential marketplace. Residential homes are meant for people to raise their families and all this stuff. The guy,
That's a good impression.
honestly speaking, half of his caucus own multiple properties. So if he was really, really into that, he's not. It's just there for the public.
That's why they call it politics.
Politics. So what it is that, the truth of the matter is, you fight really hard to be able to get into home ownership. Then home ownership, sometimes you continue fighting. And several years later, your home has gone up, so 10, let's say, years later, and you saved more money. And so you take that money out and invest in another property because you're trying to make it up the economic ladder. And then he's saying, well, that's not right. So, I really am not getting where our government is coming from, because it does not appear that they're actually really, honestly, not in the real estate realm, concerned about Canadians at all, but they are concerned about optics. And that's really what I'm seeing.
And they're also talking about somewhere on the horizon, when you sell your house, they might want some of that
taxes.
increase.
The principal,
Right?
they're going to want some. I mean, they're not going to be able to go there now, because if they did that, they would be voted out.
It's on the back burner.
Yeah, it's a Kathleen Wynne situation where, she started thinking about that direction, and everybody except for her little area voted against her and the Liberal Party, and the Liberal Party hasn't yet recovered from that, right? And so Justin Trudeau knows that. He's not a dummy. And if he is a dummy, which some people say he is, I don't believe that, but he has a lot of people around him that will help him to understand that quickly, that you can't you can't do principal residence tax. What we'll probably see is that when they talk or embark on this, it takes time for it to come into play, because the rate at which they're spending, they have to take more money from the public to pay for it. So all you people who love all these special programs and all that stuff, you're really taking all these programs. Your grandchildren are going to be the ones, and I'm talking to the young kids out there. It's your grandchildren will be the ones that will be paying for these free programs that you guys want. The free education, the free dental, and all this stuff that you guys want, which is fine. I would like it too, believe me, but someone has to pay for it, and it ends up being passed down generation to generation. It used to be in politics that, you paid for, within your generation, within your cycle, you paid for your spending. But today, no, it's a credit card. We spend like crazy, and then we see we'll be old by then. We'll see what the other people do to deal with it.
Them taking it, yeah.
They'll figure it out.
And let them figure it out. And all the youth is kind of on board with that, and rightfully so. They don't have any responsibility right now. Like, they're not even paying for their own goods. They're living with ma and pa, and they're loving socialism. I would love it too if I was kid. If my parents would take care of me till I was 35, and then give me money to buy a home,
Right.
right? Like that's pretty awesome living. So yeah, I can understand they want all kinds of free stuff. But for people who actually have to pay for stuff, free doesn't last forever, because once you give out enough free stuff that you've pretty much bankrupt your country, everybody loses except for the wealthy. Because guess what they do? They take their money and go somewhere else where it's not destroyed, because they can. But the middle class can't move. Hey, we can't go nowhere. We don't got $100,000 to buy a citizenship in another country or something like that. We don't have any of that. And not only that, we can't just pick up and move. The wealthy can pick up and take the whole family. Okay, everybody, we're buying a house. It's we bought this street over here, and we're all moving there. And we're in another country. Don't worry about it. You got jobs. You all work for my companies. Don't worry. And that's it. But unfortunately, it's not. It's scary times, I think, right now, only because we have no idea what all this minestrone soup of issues is going to do. And if those things weren't bad enough, our government really wants to spend more money. And they've got the strength to do it because they're with the NDP, which loves to spend as well and loves to spend it on, I think, in many ways, trivial things.
Hey, before we move on, Gary, any emails today?
Yes, we do have a couple of emails here. Betty wrote in at the very beginning of the show, and she said, Jackie, that was amazing, the sidewalk listing. That was funny. So she said that. Okay, thank
Gary?
you.
Betty?
Yes.
Was that email from Jackie?
No, that email was
Betty.
from a Betty.
You're not funny, Randy.
Yeah, a Betty R. So there you go, Betty R. Thank you. We hope you're still
Rodney?
listening. I'll just go through. I'll go through these, and then you guys can answer if you'd like. Carl says, after listening to the show today, I'm still a bit confused. Is the real estate market regarding cost for a home going down? That's from Carl. Keep that in mind. Nate says, Happy Mother's Day to Jackie and all the mothers out there. That's from Nate.
Nate?
Thank you. Nate,
very much.
N-H-D-E. Nate, thank you. Paul wrote in, he said, what is the government thinking about immigration? We know Canada needs immigration to sustain a lot of programs. However, there's not enough housing or housing areas for people already. Why are they bringing this many more people in? And that's from Paul. Thank you,
money,
Paul. Ron said to Randy, hold on here. He said, Randy, you named a lot of issues going on in the world, and I agree with you. That's what drugs are for. Okay, Ron, thank you. Stan wrote in here, hold on, folks, and he said, I agree with Randy about all this green stuff. It's amazing. I am all for people not polluting, not dumping stuff into rivers, taking care of land that we have, but this is ridiculous that we can't build on lots, etc., because we want to save something. Is someone talking in the background?
No.
Okay,
Sounds like Mike.
Mike. Okay, Mike, if you can hear us, you're going over the air, Mike. Okay, so let's see. Irene wrote in. Here is a topic for your show in the future. I would love to hear your take on it. She says, how about talking about digital currency? That's Irene. Okay. And last email here is from Walt. And Walt says 6.7 inflation numbers. What drugs are these people on? How about 25 to 30? That's what I'm seeing. And that's from Walt. And back to you, folks.
Thanks, Gary. Well, with Walt, yeah, well, I just filled up my tank a few days ago. Cost me $120. When COVID started, it was
Few
probably
days
around.
ago? You're lucky you're only filling up every few days.
It cost me like $80 or $70 not too long ago. I remember my mother-in-law told us we should. I think gas was like at 75 or 80 at the time. She's like, we should fill up a few barrels and store it. So maybe we should have taken her advice, and I could be making a mint right now selling that stuff.
But guys, the question from, I believe it was Carl, who said where he's still confused with where the real estate market is right now.
Yeah.
Yeah. Oh, you want to answer that? Okay.
Oh,
yeah,
yeah,
Carl,
that
it
was
is
Carl.
confused. Sorry?
Go ahead, Randy. That was Carl, correct?
Yeah. Okay, great. So, Carl, yeah, it is a confusing time. You know, your question needs to be answered two ways. Real estate prices are retracting, giving this year, but they're still going up over last year. So it really depends what really what lens you want to look at. If you're looking at last month and the month before, it's retracting. If you're looking at last year, it's 15% over last year. That's one thing. The other thing to keep in mind, Carl, is that as you try to tame or pace the market, prices are going to hold. I would say probably you're looking at next year before you really start to maybe see some heavier turns. If we do see them, in 2017, we had about a year and a half lull. Around a year and a half lull in the marketplace where prices actually curved and went down, and we're seeing that now, and then they flew back up. We're well over what 2017 was. Waiting, Carl. Yeah, I actually think that if you're in the perfect position to wait a few months to see what's going on, that's what everybody else is doing. So I wouldn't say that that's bad advice or a bad thing for you to do. The only caveat to that, Carl, is if the real estate market is going to sustain itself, and there are some indicators that it could. For example, days on market. Days on market, when I started in the business in '88, it was like 6 months to sell a house. It wasn't 6 days. And we still are looking at 7 days on market on average throughout. Now, a lot of that has to do with canceling and relisting and stuff like that. But even if you do that, there's still only like a 10-day average, which is really, really short. Months of and what that means is that there still is a fair amount of urgency that buyers are having at snapping up properties. The other thing is that the months of inventory is also another indicator, Carl, that is right now overall on the Toronto Real Estate Board. I think it is. In Durham, 0.7, yes. But overall on the Toronto Real Estate Board, I believe that number has crawled over 1 month.
Can I say something too? I think it also depends on if you're looking to buy, what kind of a buyer are you? Are you a cash buyer or do you need a mortgage, right? So I think that's a big thing too, because if you're a cash buyer, then it doesn't really matter in terms of what they do with the rates, right? So that doesn't affect you. But if you're the person who needs a mortgage, again, we don't know what's going to happen with the rates. Are they going to go up again? So even if, let's say, the prices hold steady, but the rates go up, your cost to own the house still goes up as well.
Still goes up.
So it really depends on who you are in terms of, are you a buyer, are you a seller? There's many factors that go into it. So, and it depends on what lens you're looking at. The answer could change, right? So.
Yeah. So, but yes, Carl, and I'm assuming that you would be getting a mortgage, and I'm almost positive the rates are going up. I watched the Bank of Canada make their announcements, and they were very, very aggressive. They call it hawkish at that they're going to be with rate increases going forward. As a matter of fact, their public policy currently is to not only talk very harsh about the direction of the interest rates, and they're doing that on purpose because what they're trying to do is to put in everyone's mind to stop them from buying right now, so that there isn't more demand than there is supply, driving inflation up. So they want to cool that. So they cool it in 2 ways. One is they make everything less affordable so you can't buy it by raising the rates. And 2 is they talk really, really strong to try to discourage you and curb consumer confidence from spending. So those are the 2 ways that they go about doing it. And so Carl, as Anthony said, either way, you're going to be paying more, whether the prices are declining or not, because you're going to be paying more because interest rates are going to aggressively get higher. Right now we're at 1%. Bank of Canada is in no way interested in closing out the year at 1%. They are talking at least 2% and probably closer to 3%. Is where they want to get to quickly to see how that affects the market. And remember that the policy playbook says to get 1% above, at least 1% above inflation. Inflation is 6.7. That means they need to get to 7.7, which if they got to 7.7, we're all in a world of trouble. And believe me, trying to pace a market will be the least of our concerns.
Okay, for next week, we're out of time. So for next week, again on my topic of other ways to invest in real estate, I'll be talking about house flipping and investing in rental properties.
Also, as I think I'm not sure who called in about future topics. Any top topics you guys want to know about or interested in, make sure you always send us an email, and we would love to research and help you out with that as well.
So we'll definitely be looking at digital currency.
So digital currency is something we are looking into more on the mortgage side than on the real estate side. But it is something we are looking into. And yeah, we'll definitely get to a show with digital currency, but it is not something that is widely used in the GTA. In the States, there's been a couple of sales like that. And yeah, I think that's about it.
All right, so as Nate said, happy Mother's Day to all the mothers out there listening. Wish you all the best.
You, Anthony.
And as always, it's been your home, your money, and our lives with realityradio101.com. Have a great weekend.
Thanks,
Bye
guys.
for now.
Bye for now.
This is a story about Billy Joe and Bobby Sue.
Thank you for listening to Your Home, Your Money with your hosts, Randy, Jackie, Oren, and Anthony, right here on Reality Radio 101.